This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today for our program on Monday. I'm Cesar Delgado. I will be talking about the post-harvest season without the report from the Department of Agriculture. We were talking about it with Tyler Schau from agmarkets.net. Also, we were talking about the Ag Barometer from Purdue University on today's program. This has been Back Roads of Illinois.
30%, roughly 3 out of 10, said they anticipated making no changes. 27% said they would adopt lower cost seed traits. 29% said they would reduce phosphorus rates. And just 11% said they would reduce seeding rates. 16% said they would reduce nitrogen rates in 2026.
Jim Minter from Purdue University on today's Ag Barometer. Farmers' sentiment are cautionary optimization about 2026 planting season on the trade talk lately.
Responses continue to be very consistent. 72% said right direction. That compares to 71% who felt that way in September, 69% who felt that way in August, and 74% who felt that way in July.
The reading on the barometer from 120 to 126, 30% the farmers are looking forward to seeing the trade barriers will be done. Other 27% are not satisfied with the fertilizer markets and inputs cost. The average performance in 184 per month on the barometer. I will be talking about the post-harvest season without the report from the Department of Agriculture. We were talking about it with Tyler Schau from agmarkets.net. Hey Tyler, how are you? We're here for again. This month is pretty fast. I can't believe we're having 2 weeks till Thanksgiving and Christmas.
I'm doing good. I'm in the same boat. It doesn't seem like we're only 2 weeks away from some of the holidays starting, but here we are.
Let's discuss about the world supply and demand report on this week. However, the government shutdown is playing out without the crop production and harvest progress report. What is your thoughts on the corn yield?
We actually just had to submit our estimates here not too long ago, and we put in that our estimates for the corn yield at 181.7. So if you recall, the last report we had was in September. I think the government was 185, 186 range. We've heard a lot of lower than not just expected, lower than APH in a lot of areas of Iowa, which you really need Iowa to hit to have that record corn crop that everyone keeps talking about. Illinois had some areas with some really good crops, also had some areas that struggled. I would say for the most part, Illinois is probably going to yield around the same level they did last year. It's just really hard to make that case for the state of Iowa. So when you have your two heavy hitters, Iowa and Illinois, not producing necessarily record crops, makes it really difficult for us to get on board that you're going to see just a 5 bushel plus record for the whole country. We know that corn yields were good in Nebraska, Kansas, and a lot of other areas. Parts of Minnesota had really good yields, but just on the whole, we really need Iowa and Illinois to have great crops, and I'm not saying they were bad crops, they just weren't as advertised even just two and a half months ago. So that's kind of our position on corn yield.
What is your thoughts on that number from today, Tyler?
Well, are you talking on corn yield? My thoughts are it's probably pretty accurate,
Oh,
and that number,
oh.
when it gets plugged into balance sheets, you still see a 2 billion bushel carryout. So it's tough to get super bullish corn just off of that. I think you'll need to see some continued strong demand as we go throughout the year, both from the ethanol and the export markets. And you might need to see some even bigger yield trims as we move forward.
Yeah, it's pretty tricky overall. This harvest season is over.
Yeah, coming up with final yields is always tricky. So I don't envy the job of the USDA trying to figure all that stuff out.
We have a deal with China, sorted, but what is the demand for the beans to other countries and Asia?
Demand has been good to other countries, but overall demand in the export market has lagged. We just aren't shipping enough beans out. Yes, some of that market is getting displaced. One of the things that you have to think about is typically in a normal year, what the bean market has become accustomed to is these large shipments of soybeans going to China. And so far, they haven't been in that market. We're not sending them to China. Our exports to other countries have stayed decent and strong, and some of that might pick up and offset as we go. Remember, we've talked about this before. We're not really changing supply and demand on the world stage. We're just changing the flow of supply and trade flows and where the product comes from and where it ends up. So one of the issues with that is just because China would normally export beans from the United States in November, October, November, December, January, February, they're out of the market. That doesn't necessarily mean that the other importers around the world, especially in Asia, are going to necessarily need beans in that same time frame or in that same window. So, what China might be doing is buying beans from elsewhere. And when those other countries need beans, it might be later in the year. So I don't know that it necessarily means that exports just aren't going to pick up at all. The other thing that has also happened is in anticipation of the lack of soybean exports, we've really bolstered our corn export program, and so corn is taking a lot of the rail space and elevation capacity in ports. And as a result, there's just not the room to haul and store the beans at some of those ports. So it'll take a little bit of time to sort through it. We'll still export some beans to other country. Demand for beans is still strong. The problem really isn't demand; it's just been supply and just a lack of a supply issue, really anywhere in the globe for the last couple of years.
How is the beans markets for this morning session on January? Because I saw that there was above 11.20.
Yeah, January beans settled at 11.30 today. That's up. It's up about 13 cents from the close on Friday. And if you recall, last Thursday we got smacked pretty hard on soybeans. We're down 25, 26 cents. We're right back to almost, we're within a nickel or 7 cents of our highs of last week. So we're right back up there. Technical levels have held, support has held. We're on a really steep rally in the soybean market. The 10-day moving average is not necessarily straight up, but it's very vertical at this point. So as long as that continues to hold, that bodes well for the soybean market. So must be someone in the middle. It does kind of feel like that reignited some bullish sentiment. Traders speculate or are speculating that regulatory pressure might be shifting, and some of that leverage is coming back towards cattle producers and feeders. The second thing is cash market's just been strong. Late last week, live cattle were trading 225, 232 in the Southern Plains, and so that's just cash is doing cash things, and that's a function of a lack of supply. And that's just back in the back of minds, everybody. Hey, don't forget, we still don't have enough cattle to meet the demand for beef. And I've said it before, I'll say it again. Who wouldn't want to eat beef? It tastes delicious. Crazy people.
How
That's who
about
don't
the
like eating
technical
beef.
buying in the hogs markets with these markets?
Yeah, there was some technical buying. Hogs finally seem to have reversed. Kind of did the same thing cattle did today. They plunged to new lows and reversed higher. Went through the 10-day. I'm not even going to lie. I don't even know what the limits are in hogs. But we were up $3.47 in February. I don't even know how close that is to limit, but you saw pretty big moves across the board. $3 higher on hogs. It's been a long time since we've seen a $3 move in hogs in a day.
I craving for steak from right now.
Yeah, me too.
Mm-hmm. Huh?
What is your final thoughts on the Brazilian crop production for this year's growing in South America?
You know, right now the crop. I'm not going to say it's anywhere near in trouble. Last I saw, Ag Rural Report was reporting Brazil was about 61% complete on soybean planted, compares to about 67% last year. Brazil is not dry by any stretch of the imagination, or I wouldn't be screaming drought, drought, drought. But they are drier than maybe they would like to be, and if it continues to build, that dryness could become an issue as we move forward. So we'll want to watch the weather in Brazil kind of closely. Again, with the high supply from the United States and from South America, mainly Brazil, the market has created a lot of demand. And so if you come in and you take your largest producer of soybeans in the world and you give them a weather issue, and you got the US already with what we would call tight supplies and a full year before we get next year's crop available, that could do some things to push these crop prices higher. I'm not, again, calling for a drought. I don't think there's any reason to be too concerned about that, but I do think it's something that needs to be watched. And I think that's why beans have built in a little bit of premium over the last few weeks.
Thanks, Tyler. Yeah, we were making some progress with the bears.
Looks like it. I don't get to watch. I'm usually out working, trying to get some stuff done.
Uh,
But
Thanks
it does
again.
does appear they're playing good. Take care, man.
Thanks again. Tyler Schau from agmarkets.net on back roads of Illinois.
Thanks, Caesar. See ya.